following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, let's talk futures. I have a very special guest coming back on the show, Dr. Gary Dayton. Gary, how are you? You there?
Good, Jim. Great to be back.
Awesome. Appreciate you being here. So, it's very rare we have a trading psychologist that comes on the show that actually trades futures and is a VSA expert at the same time. So we're happy to have you.
Oh, thanks. Thanks for having me. It's always fun to come in and talk with you and the folks that make up the crew and also the audience. Usually great questions and just love doing it. It's fun.
Oh, awesome. So website, trademindfully.com.
Yeah, that's right.
I got that one right. All right. I got that one right. So I didn't know you went to Rutgers though. It always, whenever I think of Rutgers, I'm like, how did they get into the Big Ten? They were one of the first that got into the Big Ten, like outside of the Midwest.
Right. They were actually invited into the Ivy League several times as well. New Jersey, Rutgers is sort of that anomaly. They're not sure who they are in some way, shape, or form. But I was lucky. It was a great program. Excuse me. One of the very best for psychology, clinical psychology in the country, and not just for research, but to really apply it and work with folks. And I was lucky to both be a part of that and having graduated from Rutgers and had a good career from it. Yeah, very lucky.
Awesome. And so part of it is sports also. There seems to be this connection between sports performance and trading performance. Is that true?
Definitely. When I was in school at Rutgers, I was very lucky. One of the professors there was also a sports psychologist, and not just anybody. He did work with the New York Yankees. He did work with the Cleveland Indians, the Major League Baseball team, the Cavaliers, the basketball team, even the Browns. Cleveland was his hometown, I guess, at one point, for football as well. And a lot of what we do in trading is performance related, just like it is in sport. Of course, we don't have the athleticism and all of that an athlete does. But the same kinds of issues confront a trader as an athlete. You know, when you get out there on the playing field or on the playing court, it's just like being in front of the screen. It's you and the ball or your opponent, and you've got to perform. It's like you and the trade, you've got to perform. So a lot of the same kinds of stressful feelings and emotions and thoughts come up for the athlete just like they do for the trader. And one of the things that I did early on was to adopt some of the work that my mentor as a sports psychologist, Charlie Marr, that he developed for the Cleveland Indians and the New York Yankees and what have you. And we adapted it for traders, and it's worked quite well. A nice little process of trading psychology based on human performance and sports psychology.
So when I think of athletics and try to compare it, I'm thinking of focus. The first thing in my mind is focus, right? So if you're on the field and you're not focused, you're going to get knocked down. You're going to miss the ball. It's going to be not only embarrassing, but not what you're out there for. With trading, a lot of us are at home or in an office by ourselves, or there's distractions everywhere. It seems to me it might be a little bit more harder to be focused in that environment.
For traders, yeah, sure. Think about it. If you're a professional athlete, you've got nutritionists, trainers, a coach, and it can be specialized. If you're in baseball, maybe you've got a batting coach or a pitching coach. You've got a lot of support around you. In trading, you're lucky if you've got a buddy who trades, right? And understands the language and what you're going through. So yeah, traders confront quite a bit more so than the average athlete, mainly because they've got that structure around them, and a trader has to develop that for themselves. And one of the things that we talk about a lot when I work with clients is what their process is. Having a really good process goes a long way to developing that kind of support that we see that athletes have, and that traders don't. That little bit of a process gives us structure, gives us a sense of, okay, what do we do now? What do we do next? And what do we do with this kind of thing? Helps traders a lot that way.
So like a structured regiment, like, all right, I'm going to wake up, I'm going to make coffee, I'm going to go listen to the news stories, I'm going to figure out what economic releases are coming out that day, that kind of process?
Yeah, and it's even more simple than that. We break it down into 3 different time frames, not the time frames that traders normally think about, but more about what do we do before we trade? So that's the before trading. What are we doing when we're trading? That's during. And then how do we deal with our results afterwards? So before, during, and after. We want to prepare well beforehand. We want to know, for example, where key support and resistance lie on the charts. We don't want to be doing that in the middle of trades. When we're executing, we want to have our, you brought up focus with athletes. We want to be focused on the trade and not let a lot of the distractions, the mental distractions get in the way of good trading. And then once the trading day is over, we want to assess, how did we do? It's a good time to learn a little bit about how the market traded that day and what we can learn there. But more important than even that is, how did we perform? Did we get in too early and have to sit through waiting for the trade to really start to take off? Or did we hang on too long? Did we not take the profits when they were available? And maybe the market moved back on us. Things that we can learn, we want to learn about our own performance and about ourselves. We do that after trading. So we keep them separate, but they all combine. What we learned afterwards now can be brought into our preparation. We can prepare a little bit better, execute a little bit better, evaluate how we've done, improve a little bit more, and that cycle just continues on and on.
And that third part, right, that post-trade, lessons learned, me and Tom Schneider call it, looking back, evaluating, that's often neglected. In my career as a commodity broker for 20 years, people would call me up and say, yeah, I lost $200. I had a terrible day today. I'm going to go, I'm leaving, see you tomorrow. Instead of saying, okay, I'm going to spend more time figuring out what I did right or wrong.
Yeah, exactly right, Jim. Most of us want to sweep the uncomfortable feelings under the rug. We have a losing day. We don't want to deal with it. We want to go to the pub with a friend and lift a beer or two. But, bringing it back to sport again, I had a great conversation with a trader who was also a tennis player when he was younger. And he was working his way up through the rankings and was on some of the semi-professional teams, about to go into becoming a professional tennis player. And I asked him, I said, how did you know who was really good on the team versus who wasn't so good? And he said, oh, Gary, that was really easy. The folks who were really good, when they came up, when they couldn't do something, maybe they couldn't hit a good driving shot down the line, for example, and they tried to perfect that shot and they just couldn't do it. They'd be the first ones going to the coach saying, hey, coach, I need some help here. I'm falling short right here. Help me out with this so that I can be a better player. That's how they figured out who the good players were. Not the fellow who says, "Oh, I don't have that shot, that down the line shot," and then sweep it underneath the rug trying to hide from it. No, confront it saying, "Hey, this is a limitation I have. Let's see if I can't take that limitation, work with it a little bit and turn it into an asset that I can count on in the future."
That makes total sense. And you have to have that deliberate mindset going in, right? At the end of the day, I'm gonna seek out more information. I'm gonna seek out opinions. I'm gonna seek out help somehow, some way.
Yeah, it's really interesting. When we look at high performers, it's not really talent or their personality or psychological makeup. None of that stuff really counts all that much. What really counts is something that's known as deliberate practice, where you spend a fair number of time at your craft, and it can be trading, it can be athletics, it can be music, you could be a neurosurgeon. Doesn't really matter what the field or the discipline is. It's you spending time on it, and spending time not on doing things that are sort of routine and easy for you to do, but actually spending time on things that are right on the edge of your abilities, stretching the envelope, so to speak, and playing in that area quite a bit every day, really stretching yourself. That more so than anything else, personality, this thing called talent, whatever that is, it's really focusing and practicing right on the edge of your ability. Having a good coach is important too, where they can give you immediate feedback and say, "Oh, Gary, you're doing this a little incorrectly. Try doing this." And having that objective set of eyes is really helpful. But that's really what makes the difference between people who are really good and then everybody else who ran as well.
I don't have a lot of talent, so you're making me feel good about this in this conversation. But um, so this is how does Malcolm Gladwell? I think it was Malcolm Gladwell's 10,000 hours come into this, right? Is that part of that deliberate process, that deliberate practice?
It is, and he made an error there. It's not 10,000 hours. He kind of grabbed onto that number. It's about spending a lot of time focused in on those particular aspects of your sport or your trade or your discipline that cause you problems. That if you could get better at them, you could turn them into assets, and that's how world-class players, whether they're athletes or traders, it's one of the ways that they do it. They scope out all of the intricacies. I mean, if you think about trading, every day, we have trade setups, right? For example, but every trade setup is different. They're like snowflakes, and I don't mean that in a negative political way. It's a snowflake, right? We all can identify a snowflake. They're white and they've got little spines coming off, and they have certain characteristics. And yet billions and billions have fallen out of the sky, and every single one of them have been different. And that's like our trade setups, right? Every one of them is a little bit different. The context is a little different, the players are a little different, the news is a little different, the price levels are different. Everything's just a little bit different, but they set up with those key characteristics, and trading them over and over and over again, seeing them set up and seeing all those different ways that they set up, help us become really good and really skilled at that particular setup. That's kind of like deliberate practice, doing that over and over and over again, to the point where, as the kids would say, you own that.
So no, I totally get what you're saying. It makes a lot of sense. It's similar to what me and Tom call muscle memory, right? It's in your mind. It's like, okay, I've seen this pattern before. I've seen this day before. This is what I'm looking for in the trade, right? It's just embedded in my head because I've seen it so many times. It doesn't always work, but oftentimes it does.
Right.
So how do I get, just like an athlete goes into a slump, how do I get out of a slump? I mean, athletes go into slumps, right? They, batters, don't have a hit for so many games, and traders might have losing trades so many days in a row. How do you get out of over that slump?
Yeah, and it depends on what's causing the slump. If it's just that we've had a period of time where we've had some outsized wins and we've been trading really, really well, and now we're just sort of pulling back a little bit, kind of regression back to the mean, sort of a normal, normal sort of pullback. I see this in tennis matches all the time where one player is just dominating and then suddenly they start regressing back to the mean, kind of playing more average, and the other players got a chance to sort of pick up. So if it's that, then you just trade smaller, trade less frequently, let yourself come back to your typical level of trading, and things should be okay. There are other ways, though, that get us in trouble. And let me talk about one of them, a very common thing with traders. When they have some oversized wins, they start feeling, oh, I'm really good here. I'm invincible, so to speak.
Yeah.
And then what happens? We start letting our guard down, right? I see this with traders all the time, especially day traders. They're really good in the morning. And then they feel like, oh boy, I've really got a handle on this market. I'm going to just, bang out trade after trade after trade. And they start doing that in the afternoon, and trade after trade after trade, and loser after loser after loser. And they wind up wiping all of their profits out. We call this moral licensing. We kind of get so excited, so we feel so good that we start letting our guard down. We start saying, well, I'm playing with house money now. I've made so much money. It's okay that this trade doesn't quite set up the way it ought to. I can take it anyway and I'll be okay. That kind of thinking gets us in trouble. And if it's that, then we want to check ourselves and pull back. It's a form of the recency effect that we have, and it creates problems for us, no question. So those are kind of two ways, yeah.
Yeah, no, but that's an interesting, that's a common phenomenon. I mean, when I was talking to traders for 20 years all the time, I would get the call, see my trades this morning, I'm on a roll, I'm doing great. My advice was always close your computer, go to Starbucks or go play tennis, or you're done, right? Because we knew they were going to give it back later on in the day because of that. I don't know if it was ego or pride or what it was, but it was a common call I got. Like, shut it down.
Yep,
definitely.
definitely.
Come back tomorrow.
Yep, it's the hot hand fallacy. It's kind of the flip side of the gambler's fallacy, right? Gambler would be sitting there and saying, hand after hand, he doesn't even have enough to, or she doesn't even have enough to ante up and open the pot, right? Yeah. So they're thinking, man, I've had so many bad hands, I'm due for a winner soon. And they start betting based on that kind of feeling, I'm due, right? The hot hand fallacy is just the flip side of that. I'm winning so much, I can't bet against myself, right? I got to keep going and keep going. And it's just the way our minds operate. We're on the one hand, we see so many times we've been losing, so we feel like the opposite's got to happen. And on the other hand, we're winning so much that we can't go opposite, because that would go against ourselves. And it's just mental. It's nothing more than that. We all know probabilities, that the current trade has nothing to do with the last trade has nothing to do with the probabilities of the current trade, and it's the same thing here.
So is part of that serotonin, dopamine, whatever other chemical processes take over?
In part, they do. Sure. Your dopamine is your reward, the neurotransmitter that kind of lights up reward and reinforcement in the brain. And so when the brain has something pleasurable and has a win, then the dopamine lights up, and that feels good, and we want to do that again. We want to repeat that again and again and again. So to some degree, yeah, that can get us into that a little bit, encourage us to do it a little bit more frequently than maybe we wouldn't if we weren't aware of that. But just being aware of it is usually enough, to say, okay, we can bring some cognitive or some thought control over this and not let our emotions run away from us.
Got it. So you talk about Mac, mindfulness, acceptance, commitment. When you put those three words together, what does that mean?
Well, it means that when we think about our minds give us a lot of thoughts and feelings. And often those thoughts and feelings are not necessarily reflecting what reality is. A good example of this is, let's say we get into a long trade. And let's assume that, for the talking purposes, that we have a target 10 points higher. And we're cooking along here. We've got 3 points in the trade and it's looking good. But then it starts pulling back against us a little bit, right? And the mind starts kicking in. Oh, Gary, it starts saying, you better maybe take a little piece off here. You don't want to have a losing trade. You had a loss yesterday on this trade, on this similar trade. You don't want to have another one. Think about taking a piece off, and your mind will start, going along in that way until, and if it really starts to pull back a little bit, maybe now it's 2 points back instead of just one. And now your mind's saying, Gary, hurry up, get out of this trade. And so you do. You get 2.5 points out of this instead of 10. And your mind's saying, oh, Gary, what a good boy are we? We've gotten a couple of points out of this trade. Nice job, right? And then a few minutes later, price goes on to goes through your 10 points and continues on up higher. What's your mind saying then? Well, if it's like mine, it's Gary. What are you, an idiot? What did you take the trade off for? Won't you ever, you're never going to be a good trader, right? See how the mind operates in this? We can't trust it really. Which mind was right? Was it the mind telling me to take it off and book a couple of points? Or is it now the mind telling me that booking those couple of points was the wrong move? What's wrong with you? You're an idiot. When are you going to learn, right? You're kind of caught in between there. Mindfulness helps us to see this as it's happening, right? Acceptance is about not getting entangled in those. Oh no, it's going to be a good trade. No, it's not. Yes, it is. No, there's no reason to get all snarled up in that, but just to let those thoughts be. And then commitment is committed to what's important. And what's important in that trade is to hold that trade to the 10-point, profit target. Put my stop in, honor my stop, but also honor my profit target. And that's sort of the commitment side of it. So in a nutshell, that's kind of how mindfulness, acceptance, and commitment works.
Right. So you implement your game plan and you stick to your game plan.
Right. But it gives you a set of useful mental skills to help you stick to that game plan.
Yeah. Yeah.
And that's the hard thing for every trader, right? We can give them a nice little trading platform, nice little trading program, but you have to implement it. You give two people the same trading program, one will do well, the other one doing the same thing will not be able to make money. And it's psychology.
And so I think in terms of affirmations, like how do I ingrain these affirmations in my head to say, this is a core belief of mine?
Yeah, I don't like that, actually. Affirmations can really come back around to bite you in the butt if you're not careful. If you have a little bit of depressive, like I tend to look at the world from a glass of half empty or more dark colored lenses, right? So a little more depressed. Some people can be, have a very dark outlook, and by putting those affirmations, oh, I'm getting better and better every day, blah, blah, blah. And they look at that and say, but I'm not, I'm not getting better. They look at the reality of things and they say, oh, I'm not. And that just makes them feel worse. So I'm not a big fan of affirmations per se. What I am a big fan of is learning how to see your thoughts and your feelings simply as thoughts and feelings and nothing more. They're not they're not always generated by us. They're not really us, the thoughts and feelings that we have. I know that can sound weird, but it's true. And we really can't control them. I can't make myself think a certain way or feel a certain way, no matter how hard I try. So it's more of understanding that than trying to program our head with affirmations that can backfire on us if we're not careful. So I'd be cautious about those.
I appreciate that. I understand exactly what you're saying. Let's pivot though to you have a lot of experience as a futures trader. We don't have that experience with a lot of trading folks that trading psychologists that we talk to. You've kind of gravitated toward, if my understanding is right, Wyckoff and volume spread analysis and that kind of thing, right?
Definitely, yeah. I'm basically a tape reader. Yeah.
Okay. All right. So it's funny because we've had Gavin on a lot of the show recently, Gavin Holmes, and then one of his he introduced us to Theo Nagapan, who's going to be on next, also. So it's the whole like VSA world's coming together for me right now.
Oh, that's wonderful. Yeah, and Gavin, he's a good friend of mine, and we've had some great times together. And he did some really wonderful things with Tom Williams by taking the Wyckoff method and putting it into a computerized program. But yeah, my approach has been Wyckoff. I was very lucky to have learned it from a fellow by the name of David Weiss, who was probably the premier Wyckoff practitioner before he died, and also Tom Williams. I spent some time in England with Tom, learning his approach to it. And yeah, it's all about reading price and volume, and reading the market by its own actions, and seeing the supply and the demand, and not worrying so much about anything else. No indicators or news-driven stuff or anything like that. It's all in the price bars, and it's a wonderful way to trade. Yeah.
So then all the other stuff is noise to you, right? Just filter it out. You don't have a moving average on your screen or anything like that.
No, we don't use moving averages. Moving averages are fine. I don't have anything against them, or MACDs or anything like that. Just never felt the necessity for it. I used to have a lot of those on, and I was working with a fellow by the name of Bill Wolf from Wolf Wave fame. This is before I got into Wyckoff. And I sent him down a chart. This was way before even email we had a fax back and forth. So I faxed him a chart, and it had, an RSI and a MACD and an ADX and probably a partridge in a pear tree. I forget what I had on there. And he writes back, and sends it back to me, get rid of the chart jewelry, right? All the indicators on the bottom. That was my first, he said, you don't need all of that. And he was really the first one to kind of teach me that I really don't need all of that. I can see it without that stuff. So yeah, we in the Wyckoff method, we're basically tape readers, and we're looking at price and volume. That's pretty much it.
Well, the next time we have you on, and hopefully we can get you back sooner than later, let's focus on that. Let's focus on the Wyckoff method and what you've learned throughout the years with those impressive people.
Oh, sure, I'd love to. There's really good stuff that to think about, and I can also talk about how other, when folks come to see me, how they are as traders. They often come to see me about psychology, and I look at them and I say, it's not psychology, my friend. It's you don't know how to read the chart. Let me show you how. Yeah.
All right. Well, I'm looking forward to it. And what's the best way? We're almost up against time, Gary. What's the best way for people to reach out to you?
Well, at our website, trademindfully.com is the main way to get through to us. Yeah, that's it. I'm not a big, advertiser of my services and stuff. I know it's kind of weird, different, I suppose, than what you're used to. But yeah, trademindfully.com is the way to get through to me.
All right. Alternatively, folks, if you want to send me an email, at NinjaTrader.com, LEARN at NinjaTrader. I'll get you guys together. So feel free to reach out to me directly also by email. Gary, it's been a half hour, just went like that. I really appreciate your time today. Greatly appreciate you being here.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.